What's up, good people? I'm Zay. Welcome back. And this is actually a 2-for-1 special. I'm actually doing 2 videos in one day. And this video, I want to talk about my investing strategy. I think a lot of people, when they think about investing, it's like either you got to be trading or, I'm buying this stock and it's like, okay, well, when do I sell? Like, what's your plan? What's your strategy while you're investing, right? I think that's very important to understand. And so I figure if I break mine down, it might give you a little bit of insight into my thought process, but also how you can ask yourself similar questions and kind of think about the things I talk about to formulate your strategy, right? So definitely gonna be a dope video, guys. I need you guys to like, share, subscribe to my channel, because again, the goal is to get to 1,000 and I need y'all help. I appreciate it. So with that being said, we're gonna go ahead, we're gonna jump right into the video. We're gonna get into what my investing strategy is. All right, so my investing strategy is a hybrid strategy. And I'm gonna break it down like this. So first, let's start with retirement account investing. That's our 401ks and IRAs. And when I say IRA, I'm talking about my wife, because we do everything together. So with her 401k, my 401k, we simply have all that money being directed into S&P 500 index funds, growth index funds at that. So depending on who your company sponsored brokerage is, they'll have certain index funds or ETFs that they'll offer you that you can invest in. So check out, your company sponsored plan, see what mutual funds, ETFs, index funds that they offer. But for my wife and I, we do growth index funds 100% in our 401ks because we're pretty young. We have a lot of time. Now, as we get older, we may rebalance, go more into safer investments. But right now, we barely in our 30s. We got a lot of time. So if the market goes down, we still be buying. We're good with that. So that's our 401k strategy. 100% into index growth, index funds or ETFs. Then we have our IRAs, right? Now we have to do backdoor IRAs because together we make, a little bit too much money to qualify for Roth. So we do traditional and then convert it before investing. That's a gem. But in our IRAs, we do the same thing. We do 100%. Actually, no, we do 50%. We do 50% S&P balanced ETFs, and then we have 50% growth ETFs. So for me, we use Vanguard. So in my IRA, I have 50% VTI, and then I have, I think it's VUG, Vanguard Growth. I think that's the one. I gotta double check. And then my wife, we do hers through Charles Schwab. So she has the Charles Schwab version. She has the S&P Charles Schwab version and then the growth one. And that's it. When we contribute to those every year, we just accumulate shares of those ETFs and index funds, just like our 401ks. And so for our retirement, I guess you can call that conservative. I don't believe it's necessarily conservative because we don't really have any like bonds or anything like that. It's 100% equities. And again, it's because we're young. And most people will say, well, you guys should have like an 80-20 split or something like that. We again, we don't have any kids at this time. Well, we got one on the way. But again, understanding what we're aiming for and the time we have, we're okay, because we got like 20, 30 years before we even touch the money. So, I guess you could say we're living a bit on the edge, but I don't necessarily think so. But anyway, So that is our 401k and our IRA strategy. Simply put, index funds, ETFs that have low fees, and we're just gonna let them ride. Accumulate every month, you know, and that's what it is. Next, we have another long-term portfolio where we actually buy individual stocks. These are stocks that we plan to buy and hold forever, and it supplements our 401k and IRA money. Well, that's the plan. And so we and in this portfolio, just like our 401ks, we dollar cost average. So every month we budget a certain amount to invest. And I think I talked about this in my one video about the whole strategy thing, where I even though we dollar cost average every month, I do something what's called timing my contribution. So I'll wait for like a down day during that month to buy whatever stock we plan to add to that portfolio. And it just ensures that I get the best deal. Now, some people may not agree with that. That's fine. You know, most people who use the dollar cost average method will, you know, pick a day the same day every single month and just do it. And they'll have like a same stock or ETF that they buying. I don't necessarily do it that way. I'm trying to build a balanced portfolio. I feel I'm a little bit smarter and kind of know what I'm doing. And so I'd rather manage my own money. So yeah, so for the long-term portfolio, you know, like I said, we use dollar cost average, and every month I kind of just wait. We have a watch list. Actually, I put the video in here. Those are the stocks that are in our portfolio. So I did a video on what's our top 5, so you know, and what we're adding to it. And so I just do that every month. Every month we put some money to the side. I buy a few shares of whatever company I like of that month, whichever gives me the best deal. And that's I guess that's like our 5th retirement account, you can call it, because I got a 401k, my wife got one, we both got IRAs, and then we had this one, right? So that's our 5th investing account I just walked through, and that's how we kind of use it. Now the last account that we got is my wife lets me trade, so my trading account. This is account number 6. Now this is how, you know, this is the account I use to trade options, trade stocks. You know, this is kind of how I use it as a extra income stream, basically. You know what I mean? Like by trading, if I make some money, I'll transfer it out and buy long-term stocks with it, or give it to my wife, or do whatever, you know, we need to do, pay down some debt. But that's our 6th, and I keep this money totally separate. So that's the thing about it. I keep this trading money totally separate from all my other investing money. So like with trading, you got to understand it's risky. So I'll be taking some L's, some lessons, but I'm not sweating it, because I know the purpose of this account, and I know that I'm not playing with money that I can't afford to lose, because everything else is already taken care of. Like our long term is taken care of. So this is like play money. This is, you know, now that I'm not up in the casinos no more, like I love this. This is kind of giving me that fix, you know what I'm saying? And but at the same time, trading, I have to educate myself, and so it's not as what would you say, as risky as the casino, where, you know, the house always win. But nah, so that's the 6th investing account. So like I said, I wanted to explain to you guys our investing strategy. So that's it. That's all we do. Like, you know what I mean? Outside of paying off debt, having an emergency fund, you know, the kind of things that I've talked about in the past. Outside of that, you know, we got our 401ks, our IRAs, we have a long-term portfolio, and then we have, like I said, my trading account. And that's really all you need. I think after that, you know, you're setting yourself up for, you know, a good retirement life. Now, we do eventually plan on adding, you know, other things to our bigger portfolio, like real estate and businesses and stuff like that. But as far as the stock market goes, that portion of our portfolio, that is how, you know, we have it set up. That is how we're managing it. And that's what we're doing. So hopefully that gives you guys some insight into how you can manage your setup. Whether you're single, you got a spouse, you know, make sure you want to try to get as much as you can in your 401k. After that, hit your IRA up. After that, then you want to have one more long-term account where maybe you do individual stocks and ETFs. And then after that, then you can get into the trading and all that other stuff. I think that's where a lot of people go wrong, and they be like, you know, losing their mind if they start getting into trading, because it's like, oh, I can't afford to lose that money. Yeah, because you didn't set up all your other accounts to where once you got into that world, if you lost, you was okay. So that's the video for today, guys. I hope you enjoyed this one. I hope y'all enjoy the scenery again. Like I said, I love taking y'all on for a walk and just talking money. I feel like it's much more personable, right? Versus me just sitting stationary and talking at you. But guys, like I said, that's the video for this week. Like, share, subscribe. Help me get to 1,000. I really, really would appreciate it. Drop a comment of what you would like to see me do another video on. You know, I'm always open to feedback. But other than that, guys, y'all already know. Stay blessed. Peace out.